I mean, it is going to require at least that amount of gold. So it's not coming out of China, who won't deal in London or won't deal with any LBMA CME product. ETFs, they're buying ETFs in Western-facing SGEI vaults where they can trade it.
Gold going up rather than fiat going down. Yeah, but, that's going to force the Chinese, I think, into a situation where they have got to start considering sooner rather than later a gold standard to protect their yuan, because their yuan will be going down along with it. I mean, unless they protect it. And the other thing, which so far nobody, I think, actually understands, is that when you get the end of the fiat currency system, essentially, you're predicting the collapse of their purchasing power.
China's massive accumulation of gold is fundamentally reshaping global gold liquidity. Central banks globally added 19 tons of gold in August 2025, including another modest buy by China, showing continued official demand despite high prices. Chinese gold miners are enjoying strong gains as spot gold rose past $4,000, boosted by central bank demand and global uncertainty. The metal isn't leaving China, it's flowing in, as even major institutions now avoid Western exchanges. Wealthy individuals and institutions are increasingly storing gold in Singapore vaults, drawn by its perceived security, legal stability, and logistical convenience. This trend shows growing distrust in paper gold and a shift toward real metal ownership. As fiat currencies weaken, gold's value could soar, potentially pushing China to back the yuan with gold and reaffirm its role as the true measure of wealth. Alasdair MacLeod, a seasoned economist, former banker, with Andrew Maguire, a veteran precious metals trader and CEO of Kinesis Money, highlight that China, Russia, and other BRICS nations are tightening global gold supply and reshaping market liquidity, eroding Western dominance. China, Russia, and other BRICS nations are tightening global gold supply and reducing reliance on the dollar by building a gold-backed, blockchain-based trade network. With over 6,000 tons of gold reserves, they're reshaping market liquidity, straining Western supply, and fueling gold's rally amid accelerating de-dollarization. The markets are always shifting. Don't fall behind. To keep ahead of the curve, subscribe and like this video. Please leave your comments in the space provided below. We would be very grateful to hear from you.
China's cornered the gold market. That's what it boils down to. Because it's not just China. You've got India, which has got massive amounts of bullion held in the form of jewelry. I mean, most of the Chinese public gold is actually jewelry as well. And you've also got Russia. Now, I understand on pretty good authority that Russia's got two sovereign wealth funds, which have a total of about 10,000 tons of gold between them. And then you've got the Russian Central Bank, which has got a further, 2.3 thousand tons, whatever. You've also got the whole of the Shanghai Cooperation Organization and BRICS, all their central banks. Presumably they've got sovereign wealth funds as well. Now, all this is meaning that the liquidity we have here is minimal. Now, let's look at the demand side. So far, this hasn't mattered because nobody wants to buy gold. I mean, any investment manager isn't going to earn fees by putting his punters into gold. He would rather put them into something which is going to pay him a bit more. And not only that, but the regulators are on his side. The regulators turn around and say that physical metals are not regulated investments. But of course, this was why they said they set up ETFs, to get around this regulatory hurdle. But the ETFs are beginning to grow. People are beginning to buy into them slowly. But the other thing, which I think is very important on the demand side, is that we now see analysts at the major US banks turning around and saying, we believe gold's going at 4,000, whatever. Whatever their reasons, I don't care. I mean, they don't know what they're talking about. I reckon that's my default assumption anyway. But, the fact that they are saying it, and the fact that the investment managers within those banks, who are typically managing or responsible for over $1 trillion We're looking at banks like Goldman Sachs, Bank of America, Citibank, Citicorp, whatever they call themselves now, etc. We're talking about huge numbers. They haven't got any. I don't think they necessarily know how to get it, actually. I mean, so that, this is interesting. When you look at the complete investment management universe around the world, it is estimated that portfolios are worth some $300 trillion. $300 trillion. Now, gold ownership of that, you just look at ETFs and maybe sort of make a few assumptions about, bullion being stored and so on. But, basically it's ETFs and nothing else. It's less than 0.5% of that. I mean, it really is. Less than 0.5% is in gold. And yet you've got these behemoths in America now thinking, oh, we better buy some of this. Now, to put it into context, my China story suggests that the amount of liquidity, which is unspoken for, including jewelry in the West, is probably in the region of about 40 to 45,000 tons. That's all. That's it. We can see what's in the vaults. We can't see what's in the Swiss vaults. That's something I don't know. I would, someone gives me a number, it'd be super. But I think quite sensibly, the Swiss don't produce these numbers. That's what I would assume anyway. But it does mean that if a 1% increase in allocation, portfolio allocation, of that 300 trillion was to take place at current prices, you're looking at 25,000 tons. Where's it going to come from? I mean, the answer basically is that we're heading for the most enormous crisis in the gold market. And the figures are very different for silver because being an industrial metal, etc., but the same principle applies. The liquidity is just simply not there, which is why it's sort of hurdling up $1 at a time at the moment. This is a squeeze on the system. And, this is very serious. And I think so, I can understand your punter selling off, $1,000 below the current level and maybe living to regret it. But, I can understand that. But the bit he's missing basically is he's going to be out of the market on the biggest, sharpest squeeze probably seen in history. I think that's where we're heading. What the Chinese are now doing, and this is fascinating because having cornered the market, they're now saying to their friends, that's not us, by the way. I'm talking about the Shanghai Cooperation Organization and also BRICS. They're saying to them, look, we're opening vaults, SGE vaults, Hong Kong, Saudi Arabia. I heard, I saw something yesterday, India. I can't substantiate that, but it wouldn't surprise me at all. And also throughout Southeast Asia, there will be exchange facilities whereby you can swap Chinese yuan for gold and vice versa. The only thing we don't have is the rate at which it might be fixed in the future. But you can see that they're setting up a network, if you like, for governmental settlements. This is not going to be available to citizens, I believe. I don't think so. I can't see it. But it will be available for governments settling their trade imbalances. And I think the point about it is that it will make the yuan attractive, if you like, as a foreign currency. The other thing is that they are setting up a process whereby if you're going to, let's say, sell South African rand to buy Indian rupees, at the moment you have to sell your rand to buy dollars, sell the dollars to buy rupees. They're cutting that out completely. Mm-hmm. This is going to release foreign exchange commitments, which, according to the Bank of International Settlements, they reckon is around about $80 trillion. We're talking about the dollar's usage declining quite rapidly on these developments. So where does that leave the dollar? Well, it's the end of the fiat currency system. I mean, that's what we're seeing. All we don't know is the precise timing. But everything we see rather suggests it's going to happen sooner rather than later. So where does that leave gold? Well, wake up, folks. This is beginning to happen now. And I really can't see how this one's going to be resolved without many, many eggs being broken. I really don't.
And I think what you're saying here is not that gold's going up; it's just requiring more of these debased fiat currencies to buy this same ounce. So if I'm a seller of gold, what is my offer price? My offer price is based on that equation, and also if I see if there's two fixes now, competing fixes in Shanghai. And it's the funny thing is, I don't know if you saw, you must have seen that Bloomberg article, I think last Tuesday, threw the cat amongst the pigeons when they came out and stated that China aims to become the custodian of foreign sovereign gold reserves. And then they went through this article was excellent. And it's all the things you've been saying. I mean, long time ago, it was all a conspiracy theory. Oh no, well, that couldn't possibly be happening. Of course it was. But the amusing part, what really amused me, was the World Gold Council followed that up with a link that showed that gold trading volumes in London still dwarf Shanghai. Give your head a shake. I mean, you're talking about the 600 tons of gold that shuffles around, unallocated gold that shuffles around the books of these banks, when you've only got 3 to 5 tons actually settling physically at the fixes. It's a farce and on the other side of the equation, you look at roughly 450 tons or whatever of Shanghai gold moving around, but it's physical. It's real physical. And I think on one day, we saw, and I don't know if you've seen other days like this, but one day we saw 53 tons entering the warehouse. Now, this is physical gold, as you say. So there's an offer that was hit to take that into the vault. And as you say, it's not coming out again.
Alasdair MacLeod and Andrew Maguire here discuss massive delivery requests through futures markets. Nearly 950 tons of gold and over 11,000 tons of silver this year show growing shortages in physical supply. As trust in fiat currencies erodes, gold and especially silver are seen as vital protection, with silver harder for governments to seize. Let's get into the details of the interview for further insight.
The other thing that fascinates me is that the futures market is being used as a means of delivery. I mean, I don't know if you saw, but the stands for delivery yesterday were, I mean, in gold, it was something like 66 tons.
Yes, it was.
Just in one go. Silver was
still
huge.
24 tons, 24 tons to sell, to deliver.
Yeah. And silver was huge too. I mean, that was 1,500 tons or something. I did work it up. I can't remember what it was. But this is enormous. I mean, what it means is that the gold that's been delivered this year, or stood for delivery, this year has totaled about $950. 950 tons this year alone. And if we're looking at silver, I think the figure is something like 12,000 tons. I mean, these are enormous numbers. They really are. And you're looking at, in the case of silver, you're looking at something like 58% of global mine production. Which is what, 800 million ounces. I mean, this is what is going on. I mean, you've got to go and buy a future in order to get your bullion. This quite clearly shows that there's nowhere else you can go and get it. Now, that having said, I do understand that the retail market is slightly different. And there are interesting cross currents there. I mean, I understand that, Krugerrands are readily available and in great big quantity. And when it comes to kilo bars, I mean, you can buy those quite easily. Sort of 1, 2, 3, 10, whatever. That's absolutely no problem. But as soon as you go out of beyond that sort of the wealthy retail market, as it were, it then gets extremely difficult, as I understand it. Is that your experience as well?
100%. The larger the size, the more the premium.
So, I mean, this is the way it's going. And, going back to the 1% portfolios is 25,000 tons. I mean, where the hell is it going to come from? I mean, the answer basically is that the gold price measured in fiat is going to spiral out of control. And then, of course, you got the implication about what is the value of fiat. Now, we all turn around and say, well, is gold going up rather than fiat going down? Yeah, but, that's going to force the Chinese, I think, into a situation where they have got to start considering sooner rather than later a gold standard to protect their yuan, because their yuan will be going down along with it. I mean, unless they protect it. And the other thing, which so far nobody, I think, actually understands, is that when you get the end of the fiat currency system, essentially you're predicting the collapse of their purchasing power. Everybody in the investment management industry thinks that, okay, inflation's a bit sticky, but it'll probably come down next year. We're going to get cuts in interest rates. Wrong. Prices are going to rise hugely. But of course, the thing that nobody really appreciates is it's not prices rising, but it's the purchasing power of the currency collapsing. I really do think we're in for a period which looks like replicating what happened in Germany between 1922 and November 1923. We'd already had a post-war decline, a substantial decline in the purchasing power of the Reichsmark. It steadied between 1920 and late 21, when there was a stock market crash. We've got a credit bubble here. That's going to crash. So this is actually a replication, if you like, of end of World War I, end of COVID. Okay? Purchasing power of currencies goes down. In other words, we saw inflation rising, interest rates rose with it. Now it is stabilized. And we've got a lovely period of anybody who's got anything in the stock market is doing wonderfully, thank you very much indeed. Making lots and lots of money with his Nvidia and his Bitcoin and God knows what. That is just absolutely the same as 1920 to 1922, the end of 1921. And what follows, we're about to see. And this is similar. It was the end of the Reichsmark. And it's going to be the end of the dollar and all other fiat currencies that sail with it. And what that means is, if you look at what happened, all the stories about, wheelbarrows full of cash and all the rest of it, and the complete collapse of values, like property, people making money. One way in which you really will make money as a manufacturer is to manufacture to export to Russia. Because Russia will go on a gold standard the moment China does, and also it's silver, and it won't be just confined to them, because if you look at the value of base metals, they've been left behind hugely in all this. I think that's going to be a big catch-up. The overall consequences of this, I think, are going to hit everybody very, very badly. But it does mean that you've got to hoard gold as much as you can. Silver as well. Of course, the other thing is that governments could be stupid, as they always are, and they decide, we're going to confiscate gold. So keep it away from the government, keep it away from the banks, because the banks will do what they're told by the government. Keep it out from the banks, and don't tell anyone you got it. Silver, I think, would be a lot harder for them to confiscate that. I really do. So that makes silver especially attractive in this collapse scenario. And also, it's probably, I don't see necessarily that we'll be going out and spending our gold or whatever, because that's not the role of gold, really. What we will do is we will find, our currency, we will liquidate whatever gold we need for currency, whatever its value, as it's needed. And you'll be able to buy a nice big mansion and country estate and all the rest of it for, sort of 10 ounces of gold. That's what happens. But you need to get your Britannias, maybe. If you can get someone to accept your Britannias, they'll probably bite your hand off, but then you can buy all
and no capital gains tax either. So
not on that, no, or on sovereigns.
Yeah, which is again an amazing, because I sometimes say to people, look,
Well, don't
should
tell
I'd like to
Rachel.
buy?
Don't tell Rachel.
Yeah, exactly. But the thing, maybe if you're going to buy a single kilo of gold, why not buy the equivalent in Britannia's or
Well,
in
exactly.
sovereign?
I mean, the premium's only, what, 2 or 3%? It's
I know. It's nothing. Absolutely nothing.
What are your thoughts? Could China's potential move toward a gold-backed yuan mark the end of dollar dominance? How might Western markets react if BRICS fully transition to a gold-based settlement network? If you appreciate this video, please hit the bell button for timely updates, subscribe to the channel, and like the video. Also, leave a remark with your ideas. We value your presence and thank you for your support.